Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, October the 22nd, the year 2018. I got it right. Let's talk trading. What is your saw? Reading emails this morning before I turned on the trading platform. Oh, there was one, I think it's The Art of Manliness, and they were talking about sharpening your saw. And for those of you who don't know what that means, it's if you've got, say, 5 or 6 hours and you need to cut firewood or cut down some trees, take an hour to sharpen your saw, get your tools in order. So, my question to you as a trader, what is your saw? Well, I mean, you don't really have to sharpen your computer or your trading platform. So it kind of goes back to, looking in the mirror and you are your saw. And in another email I was reading, they were talking about, how the top athletes, perform, at their peak levels, and they perform, during adversity. And they said one way of doing it is to visualize what you're going to do at the event. Maybe you start 3 days before, maybe you start 3 months before. You just keep thinking about it. Everything from the time you get up, what you're going to wear, what you're going to eat, how you get there, you visualize starting, the event and what you do if this happens or if that happens. You just visualize the whole thing. So, for example, in trading, you put a trade on and you think, well, so you've already, if you put the trade on, if your stop loss doesn't automatically get placed when you enter the trade, then you immediately put your stop loss on. So now you've only got to worry about half the picture. You only have to worry about one side of your entry, the plus side. The minus side, you've already determined where you're going to cut your loss. So that's like half the game right there. In some cases, it might even be more. Might be consider it 90% of the game. Just putting that stop loss on to protecting your portfolio. I was going to say property, but it's portfolio. So, we talk about this, or I talk about this every day. I put this screen up for you just as a reminder. So if you're new to this channel and to me, oh, by the way, down here somewhere, you're supposed to click subscribe and then click on the alert. So whenever I put out a new video, you get an alert that, hey, TheRumpledOne put out a new video. I better go watch it. So you take your money and risk management, and you've already got half of it, half the trade side, the downside covered. You don't worry about it. So, I mean, right here, for example, if you were short and if you got short right here at 75 and it pushed down and it starts to come back, either you take that profit, that little handful of profit, whatever it was. Let's see, what's the low? 31. That's nothing to sneeze at. That'd be a nice little profit. What, 40 some pips? So you have to decide when to exit. When did I take profit, which is, probably in the top 10, if not top 3 questions. So that's one way of sharpening your saw is by working on that trading plan, visualizing what you're going to do. Because you see, price can move quickly and price can move slowly. And it's like some people say it has meaning, the speed, but does it matter? Because in your portfolio, the green pips are the same number of green pips. The question is, do you take them or do you wait for more? And if you have certain rules of thumb, like, hey, if I make, X number of pips in like 2 minutes, I'm taking the money off the table. I don't care what happens next. Think of that as the market smiling upon me because I have no idea what triggered that run in my favor. And just as quickly, it can go the other way in the blink of an eye. So those are the types of things you visualize, and that sharpens your saw. So we look here at the weekly, and look, remember when I put the video out last, there was a few that had gaps to be filled. Now there's only one. So I hope somebody's taking advantage of those gap fills. And please comment, let me know. I'd like to know. And you can see here on the weekly, which is really almost the same as we got in the upper wick zone. We exited here. We're 13 pips below that upper wick zone. We're into the lower wick zone right here, just barely. And you see we actually we got in here right in that lower wick zone. We actually passed the midpoint and turned around. And midpoint's always a good place to enter trades and or take profit. And on the daily, you can see we had a nice break out of the previous day's high. 100 pips range on the euro yen. 1, 2, 3, 4, 5, 6, 7 pairs over 100 pips on the day. On the range, the yen only clocking in at 53. But there's been a lot of movement on the yen. Might show you that on another chart as we move through here. And right here you can see we opened the week, we hit the pivot, we were right around here. Then okay, right here, buy zone trigger. Now you may have stopped out here, or possibly if your stop was here, you didn't stop. Then if you were a little late to the game, right here was an entry. Where do we take profit? Once again, candle went up, candle closed. Price made a new high, came back down, hit that high of the previous candle right there. Take at least half off, if not all, because that was a nice run. And you were talking 40 pips. You don't want to give back 40 pips. And then what happened? Right here, we had a weekly open cross, which is always a nice trade right here. Or if you waited to the short zone, once again, you got short. When do you take profit? Here we go. We made a new low. We came back. Once again, right there is where you want to take profit. And that would have been 20-some pips. And somebody's going to say, oh, that's hairy hindsight. But we talk about this every day. I mean, the daily open's the daily open. These lines get drawn at the same spot every day. But we're not really too concerned about what people want to say against this. And that's part of sharpening your saw is, basically you put your earplugs on or in. So you don't let what other people tell you or say about what you're doing affect you. You ignore it. You set up your environment so you don't have that noise, that distraction, so you don't have the self-doubt or second guessing. Because most of the times in these videos, like I think I told you, probably in the beginning of the year or something, that I can explain these methods, but in a very short period of time. I mean, there's only a couple of rules, but the thing is, you have to sharpen your saw, which is you, so you can apply this the same way each and every time, because you don't want to second guess yourself. Because you go, oh, I don't know if I should enter here because here, oh, I got stopped out. Oh, darn it, I missed it. You don't want to be that trader. Rat zone right here. Here we go. 39's the trigger. We're on a red M15. Probably wait for this candle to close in about 3, almost 4 minutes. And then you might have an opportunity to get in on a green candle. You can see here, red candle closed, green candle closed right there at the trigger. And there was a few pips to be had, 10, 12, 14 pips or so. Or you could have just taken the turn trade, red, green breaking the high of the previous candle. We saw the pivot got hit. There's the weekly pivot. It's been taken out already. Once again, we took out the daily pivot. We only have 2 open pivots here for the year. And right now, you see, I think yesterday we were about here. So we had a 1 ball at the bottom, green at the line, 3 ball at the top, red at the line. Now, normally when we play these balls, you don't want to, you usually want to let that candle close. But sometimes, especially on 3 balls, if it's putting in a new high and turns and that candle turns red, you can jump in early. That's kind of bending the rules just a slight bit. But you see here on that rule bending, you would have gotten in about 10 pips earlier. So that's up to you. And so you see here, red candle, it's saying you don't buy when there's that red candle. See, it's all red. It's selling. No, you don't buy, you wait. And let's see, I believe yesterday we had a red at the line, green at the line. Well, here, green at the line, paid off big time. Red at the line, paying off big time. And remember, you see this long bar here? See this long bar here? Usually price likes to retrace those long bars. So right here, you see price started here. Price likes to come back to the open. I think that's that 0 line that Mighty One talked about. Hey, Mighty One, if you're watching, shout out to you. Wick zones. You can see here we didn't have much of a wick zone at the bottom, but at the top, in and out, in and out, in and out, just like the burger, right? In and out burger. And you can see here we had a very nice highest open short, and here we're having a lowest open long. Right there, you see it came back and touched. Inventory reduction bars. There's that long trigger, short trigger happened there. You got a couple new long triggers being put in, and you can see the short once again grabbing a handful of pips. One of my favorites, just previous daily, weekly, monthly, open, high, low, selling going on. See, well, yesterday we had buying 800 and something, or was that selling? I can't remember. I just remember we had 800 ticks. I have to look at the video. But you can see once again, candle color at the lines, profitable. And you can see here, we're just kind of in the chop. We had a long trigger here, good for just a few pips. See, it doesn't work on, this is a lower indicator. See, the chart's actually up here, but we just have a blank chart. But this is all lower indicator. Just so you guys know what I'm talking about. See, indicator 1. Indicator window 1 down here. And once again, the Einstein line, really simple. This is when I open the chart. It's essentially like the buy zone. There's the long trigger, there's the short trigger. And you can see right now that last one is good for, what, 10 pips or so, 9 pips. It's just simple stuff, simple stuff. So that's it for today. Remember, you need to sharpen your saw, and your saw is you. You know, your system, your method, your indicators, they're probably pretty solid, especially if you got them from me, right? But no, it doesn't matter who you get them from. You know, just make sure you're doing what you need to do. You're working on what you need to work on, which is you. Make sure you're doing what you're supposed to be doing when you're supposed to be doing it, because it's not what you trade, it's how you trade it. So let's get out there and drain the banks.